in a good. So again, some of the patterns in crypto, they only happen for 15 in once per 10 years, once per 15 years. There were literally some things that we're never going to see again in crypto. Like a big exchange failing, that could definitely happen again. Don't get me wrong. But you know what XRP has done, I have only seen with something that would be once per 10 years.
I think in a great space right now. Some of the better treasury companies that are either cash flow neutral or positive and their MNAVs have come down a lot. I think that's been somewhat de-risked, especially if they're the ones that also have pretty low leverage. I think those are in decent shape. Gold I like longer term, but the value investor in me is a little bit.
So yeah, the issue with gold, it's rising so much. You don't know if you can like buy tons of it and actually transport around. You can lose it. That's not a thing with XRP. Yes, you can lose the wallet. But XRP really has that long-term play here where gold cannot be developed anymore. XRP can be still developed for the years ahead. Like even 20 years from now, they're still going to update the technology behind it, which has developed so much.
Pretty high, pretty fast.
Yeah.
I started warning about that back in April, and it did this pretty long consolidation. It recently just broke out of it. So I got a little bit more kind of bullish again, but it's still just a little frothy. We'll see.
So we've just come through a very pivotal moment in the entire crypto industry where multiple cryptos like Bitcoin, Solana, XRP, and all the other ones tested these bottoms. XRP, as some of you may know, went down to 267 very briefly before very quickly rebounding to the price points that we're at right now. And while it is indeed possible there's going to be more volatility in the next months ahead, the upside is outweighing the downside risk extremely heavily. I mean, we're talking about 95+% odds that things are going to start looking much better.
That's because of the rate cuts. The rate cuts really push that forward here.
From here on out. And Lyn Alden is going to explain some new perspectives that I have not shared with you guys ever before. So please smash that like button so everyone in the XRP army sees this video, and let's get into it.
Kind of what we're in now is fiscal dominance still. So the same drum I've been beating for a while, but it's kind of fiscal dominance with a slightly slowing underneath aspect to it, because we have other headwinds like tariffs, a little bit of cracks in the labor market, nothing particularly strong. And so
the market is still perfect at this point. Like it's even holding on to the near all-time highs.
It's kind of one of those things where data, you can always find data to support something if you want to find the things that are kind of running hot. There's plenty of data points out there to find them. If you want to find the things that are looking really bad, I mean, commercial real estate's slowly been having issues, and obviously the residential real estate market's been, at least volume-wise, pretty much slammed shut for a while. Like I said, little cracks in the labor market, a lot of indicators still not looking great. So any camp can kind of find what they're looking for. But I think basically the summary is the private sector itself is in a somewhat sluggish state right now, but when you're running 6 or 7% of GDP structural deficits without a recession, that is a type of stimulus. And I think that's the environment that we're in, and that's a lot of that is baked into the cake rather than something that it was kind of an active decision this year or last year. It's kind of more structural. It's based on entitlements. It's partially based on interest expense, partially defense, and all this stuff that's intertwined there. And a lot of that is pretty embedded and keeping things somewhat elevated in kind of that K-shaped economy or two-speed economy, whatever terminology people use. We can only kind of focus on what we can control. I would not anticipate the cavalry's coming anytime soon, so I wouldn't expect the fiscal side to get its act together in any sort of investable time horizon, which basically means that it's on kind of people to have to do it themselves. And depending on their level of knowledge, their volatility tolerance, and all sorts of things, there's different assets that can do it. I think that Bitcoin's the fastest horse in the race.
I have seen gold rise, but compared to Bitcoin and XRP, like XRP just absolutely exploded.
Paul Tudor Jones and others have kind of been saying that for years, and I agree. Some people like gold, some people like equities, some people like Bitcoin, some people like real estate, some people like all the above, or some subset of the above. I'm kind of I like equities and gold and Bitcoin. But I do think that Bitcoin is, if you look back 5 years from now, it'll probably have had the best performance of that group, I'd expect, probably 10 years as well. And it's one of the things you can do. When we look at the public level, I mean, nothing short of like really fixing healthcare expenses, for example, or fixing just the overall, revenue and taxation aspect of the government is really going to meaningfully address this, which mostly puts it down to the individual. As stablecoins were already growing pretty rapidly, and as there's pretty clear demand for them, it made sense for them to try to bring them into the fold. So 5+ years ago, stablecoins were very small. They were kind of on the periphery. But now, I mean, there's individual stablecoins that have, well over 100 billion, and collectively, it's a multi-$100 billion industry. I think it could clear on its way to, $1 trillion in AUM eventually.
This is a very good point. I agree with that. There is stablecoins are something that even government has talked about, like going all in on, and tokenization.
These are really big pools of capital. It's basically the modern Eurodollar. So offshore dollars is kind of the biggest use case for them. But of course, you can bring some of them onshore for certain purposes too. Anyone who sent an international wire can potentially see the benefit of stablecoins and how efficient they can be. And of course, people that want dollars in jurisdictions where it's harder to get physical dollars, it's also obviously a pretty powerful use case. So I do think it makes sense for the government to want to codify how they work. Naturally, banks get spooked by them because so they try to make it so that stablecoins can't directly pay yield and things like that, so that they don't compete too much with bank deposits. There's been a long history of whether it's central bankers, whether it's the government, kind of being fearful of kind of full reserve looking things.
Yeah, that's right.
So because they worry that if something is full reserve and something fractional reserve, what happens to the fractional reserve one? Why wouldn't all the capital just suck out?
Exactly.
And then what does that do to the entire current lending dynamic that has all the existing stakeholders that like it the way it is?
Well, and sorry to interrupt you, but it kind of goes to the brilliancy of stablecoins as a business model, right? Because it's like you're issuing a token, it's backed 1-to-1 with the US dollar, and now you're taking that dollar, putting it into a treasury that's yielding 4%. So you're essentially just printing money. I mean, these are extremely profitable ventures, right?
Yes, as long as, they're hard to get because there's liquidity network effects in play. So it's easier to start a bank than it is to start a stable coin. So it kind of rewards the earliest movers that got through things and are now the top 1, 2, potentially 3 stablecoin issuers. But for those that can get to that point, it's quite lucrative. Another way of putting it is that the really big banks in the country, they can have they have a pretty big deposit base of like near zero yielding deposits. Whereas a lot of smaller banks struggle to retain their deposits and they have to pay a higher rate. So stablecoins right now are able to pay even before certain laws kind of make it harder to pay yield. Just clearly there's been enough demand for them without them passing on any of that yield. And because there's fairly few issuers that have any sort of network effect to speak of, it's been extraordinarily profitable, like kind of up there in like the most profit you can get per employee.
And this is what I've been trying to tell everyone that I work with in the finance space, because I've been getting very much involved in the public sector, in real estate, and many other different asset classes too. And
that's what's good with XRP. I fully agree with that. Like, there's nothing that gives better returns. Again, it's super risky. It is, but everyone who bought real estate got off worse than if they bought XRP. And you can't predict that. In today's markets, it's actually impossible to predict. But it is a great way to show how strong technology and utility is in today's space.
most of them, they see that I do very well in crypto and they have a lot of questions for me. And this is the first thing I always explain to them. Stablecoins are going to change banks forever. Stablecoins give banks access to 4%.
I think stablecoins will change forever. Like stablecoins itself, it's going to be more regulated. It's going to take the technology of a stablecoin, but it's going to fundamentally change how it's regulated. So maybe like USDT will not be USDT. They will have their own stablecoin.
Yields when they would previously get zero just for having stablecoin dollars. It is the equivalent to a regular dollar, except for the fact that they are now purchasing treasuries with every single dollar that they have, and they can still use these stablecoins for lending and every other purpose they normally would. They're essentially becoming their own treasury yield company, and it's so efficient because every single person
That's why I feel like in 2020s, these crypto markets are in building stage. So you shouldn't feel bad like if you just came in like a year ago, because I literally think crypto is so slow, it's going to build for the next 5 years.
Banking with them, or every single person that's using their stablecoin, if they're a stablecoin issuer, is, you know, going to be able to get access to the same dollar regardless. And this is why Ripple's RLUSD is going to be so massive. They got all the regulatory approvals to get the stablecoin issued into the market, and now they're getting millions of people that are starting to get onboarded onto the stablecoin, and they're also using this for all of the businesses that they're buying, the businesses that they're integrated into RippleNet, and of course the securitized things. All of these are happening through the RLUSD stablecoin. So you got to think about all the extra liquidity and capital that's going to be flowing through the XRPL just because of the stablecoin. That is absolutely.
So yeah, I'm not too sure if they're going to be using XRPL, but the thing is, XRPL has the advantage because it can do many transfers and it is much, much cheaper. That's where XRPL wins. And if the banks decide, okay, we want to use Ledger, which some of them are, this is going to be an easy win for them. So smash that like button, guys. The XRP